Welcome to the Recreation Nova Scotia Board of Directors video training series. This training series is made possible by a grant from the Nova Scotia Voluntary Sector Professional Capacity Trust. And this video is reading financial statements. We have talked about in previous videos the importance of a board member being informed so that you can make good decisions, provide clear direction. One of the most common pieces of information you're going to receive as a board member is a financial statement. This statement is often made up of three components: a balance sheet, a statement of revenue and expenses, and a cash flow statement. And you need to be able to look at all three of these together to get a clear picture of where the organization is financially. Let's start with the balance sheet. The first question that everybody asks is, why does a balance sheet always balance? A balance sheet comes from a simple formula. Assets, which are those things the organization owns or has that has value, is equal to the liabilities, what the organization owes, plus shareholder equity. Now this is a formula for a for-profit organization. So shareholder equity or owner equity, the amount of money that you have as a shareholder or owner, is equal then to the assets minus the liabilities. So what does that mean for a not-for-profit? Because we don't have any shareholders, we don't have any owners. It means that assets are equal to the liabilities plus what funds we have, what assets we have that we can and we will reinvest into the organization to do its work. And we call those net assets. So the net assets of the organization are equal to the value of our assets less the things that we owe, the liabilities. So when you look at a balance sheet, you're going to see this. You're going to see on one side of the balance sheet, or on the top of the sheet if it's done in a portrait style, how much cash the organization has, what our accounts receivable are. That's the money that people owe us. Perhaps you've invoiced people. The inventory we have, what equipment we own that if we resold it would have a value, and things called prepaid expenses, which are things that we've paid in advance but haven't yet realized the expense. So if we suddenly stopped, we would actually have money coming back to us because we've paid for it in advance. On the other side of the balance sheet, or on the bottom of the page, you have liabilities. Those things that we owe. Accounts payable. Invoices that we have for services or things we've bought that we have to write a check for. Deferred revenue, which is perhaps revenue we've earned for services we haven't delivered. Maybe you charge people a membership of $120 for the year. Well, really, that's $10 a month. And if you stopped operating, if you shut the organization down in the middle of the year, you'd actually owe people half their membership back because you haven't delivered the services that they've already paid for. And then you have net assets, that money, that equity that we have to reinvest in the organization for it to continue its mission. These two balances are out. That's your balance sheet. The next statement is revenue and expenses. And this statement says, what money did we earn, from what sources, where did we spend it, and do we have extra money left over or not? The third statement is a cash flow statement, which is a statement to allow us to see where the money went. Remember, in your statement of revenue and expenses, you can make revenue that perhaps you're invoicing people for, so there is no money yet in your organization. It's possible to sell a whole bunch of product on terms of 30 or 60 days and not have any money yet. So yes, you may be making a profit, but you don't have any cash. And you need a cash flow statement so that you know how much actual money is in your bank, so that you then know that you have sufficient resources to pay your upcoming bills, such as invoices outstanding or staff salaries. So as you look through those three statements, you should now have a clear picture of where the organization is. There's some examples of questions you can ask when looking at your finances. Do you have the cash to meet your obligations? Are revenues as you expected them to be? Remember, when we did the business planning work, we had you attach revenue numbers and expense numbers to the business plan, and that had timelines on it. So you should be able to look back at that business plan, match it to the budget, and now match it to your financial statement and see if the revenues are as you expected them to be. Are you on line for your expenses, or do we have a problem? What do we owe, and what do people owe us? When economic times get harder, sometimes people don't pay their bills as fast. You need to watch for that, and you'll see that through your financial statements. Are our assets valued properly? Maybe you have inventory from an old program that you used to run, such as an education program that's not running anymore. Well, if the program stopped, those brochures and those materials may once have been worth something and may now be worth much less. How are you taking that into account in your financial statement? What about equipment? We all know that computers don't last very long versus things that may have a lot longer lifespan. How are we evaluating those so we know that the amount that we say we have in assets is reasonable? And then, what does all that mean? You need to look back and have a discussion. Are you concerned about meeting your obligations? Are you concerned about people paying their bills? Are we making enough revenue off the activities that we're doing? Are things costing too much for the benefits people receive? Those are questions for you as a board to look at. And remember, there's lots of help. We've attached some forms, some samples to this video for you to look at to get some more information. We've also included some links to other websites and other tools that you could use. And there's people in your community who can help. Perhaps part of your membership includes an accountant. Perhaps you know an accountant. Perhaps you're living in a community with a university or community college. Ask someone to come in and do a presentation for you. Ask someone to come in and explain the financial statement. Remember that we said in the orientation video, this is an important thing to include in your new member orientation. You want your new members to be comfortable reading the statements, be able to interpret what they say, so that you know that things are in good hands.